Hello and welcome to another episode of the Financial Advisor Forum's 2014-15 presented by UTI Mutual Fund and CNBC TV18. I'm Sumit Lakhotia. Now, the Financial Advisor Awards and Forums were instituted to felicitate the very best of advisors who work tirelessly to create wealth for the Indian investor through wise investment plans, sound advice and product recommendation. Now, we talk to the community about the changes in the regulatory regime and the way to adapt for the new environment. We also talk to them about the challenges and the issues and the way ahead as our experts travel around the country to the key cities. Today, we come to you from Hyderabad, which is one of India's most important economic hubs. Joining me on the panel are Suraj Keli, Group President, Sales and Marketing, UTI Asset Management Company; Shashi Bhushan, CEO, Way to Wealth; Nitin Vyakranam, CEO, Arthayantra; and B. Anand, CEO, Millennium Finance Limited. Thank you, gentlemen, for being here. Thank you, everyone. Let's start off with this panel. In a person's asset portfolio, while they're doing the asset allocation, the percentage of mutual funds is pretty low, unfortunately. What are your thoughts? What's the way ahead? How do we get this number up?
The starting point is that Indians like the word guarantee, right? So they tend to invest in products that guarantee returns, and Indian rates, especially on guaranteed products like PPF, bank deposits, are significantly higher. Right. So I think the investor does believe that if they are getting that kind of a rate, where is the need to go into a mutual fund kind of product? Having said that, I do believe that markets play a very big role. So my belief is that if you address some of these things in terms of educating the customer, simplifying technology and leveraging technology and simplifying communication, we'll get far greater results, especially if the Indian markets continue to do well.
Okay. The trust factor is really important. How can IFAs build that trust among people, among their customers?
In the Indian context, the trust quotient is definitely going to play a pivotal role in getting the size and length and addressing the length and breadth of the whole market. India opening up in whatever sense of it will help get in more younger crowd into being their customers, and their methods of advice will help grow the size eventually.
Okay. How do you think technology can change the game in the mutual fund industry?
The biggest change that we will see with technology is access. Right? Today, if you look at the mass majority of the people out there, there is no access to quality advice. Right? Technology changes that and allows people to access it first. Right? When you talk about awareness to people, awareness is about their own personal finance. How can you, as an advisor, help them reach their aspirations? If you can address that question, and it can really change things in India. And we feel that with technology, we can do that at a very different scale when compared to what we have seen in India.
How should IFAs and how should people work towards helping customers, set a goal for them and implement this goal? That's really critical.
Yeah, as you said, the first step is building the trust. Trust comes only with knowledge.
Yeah.
There's nothing else. You need to be thorough with the products, and you need to show that you have more knowledge compared to your customer. And again, there are two kinds of customers. If you're talking of HNIs, their goal is preservation of wealth, not really, there's no specific goal like marriage or things like that. So you need to understand the stage he is in.
At the core, everyone has a motivation. It could be your child's education, it could be retirement, it could be buying a home. It's once you know the primary motivating factor, the connections that happen with your customer are at a very different level. When you talk product, it's actually quite mundane for the customer.
How important is a brand? So, for example, Way to Wealth, it's a brand. We know it. Wherever your branch is, if somebody can go and see the brand and they are like, okay, we know this. How important is this brand building for an IFA so that they can, today they are in Hyderabad, they might be having branches in Hyderabad, they spread across different regions, maybe for South India and then the full of the country, but how important is this brand focus?
Let me put it this way, brand is definitely critical, but a brand for an IFA is very relatable. The way he relates to his customer, the way he builds up that confidence, and there's an invisible, or so to say, goodwill built around that advice, and that, trust me, is priceless.
Suraj, I want to talk to you about some regulations which have incentivized fund houses now to push mutual fund products in cities which, the B15 as they call them, the bottom 15. How quickly do you see this happening?
Essentially, I think the regulator did a great thing, by, thinking through that, why is it when you look at deposits or loans, you have B15 contributing so significantly, but when it comes to mutual funds, the penetration is so low. So I think the whole idea was to incentivize, whether it's the IFA community or the mutual fund house, to really look at these markets and look at the potential of these markets and help them really grow in those segments. So I do believe that with markets being more, supportive over the years, I think the effort will start translating to much better numbers in these segments.
What do you do when customers come to you and they'll say that, market's down, now I've lost money, I want to pull out?
At the time of investing, you need to explain to them. You need to maybe show them the data. If they know beforehand that these are the kinds of ups and downs they'll be going through, then they will be very comfortable.
Mobile phone coverage in this country is just skyrocketed. It's unbelievable. How can this technology be used to create more exposure for the mutual fund industry in these smaller towns and villages, in fact?
A lot of customers are very comfortable taking control of their finances. They want to do it at their own pace, right? And the problem that also exists in these towns is that for an IFA to exist there has to be infrastructure to support the IFA,
yes,
which is very expensive to create.
Yes.
Right? Technology can really, overcome that and, leapfrog that problem and really, get to those kind of towns and cities. And we are seeing that already with our own customers.
Every year you have almost about 10 million people coming into the workforce. And this workforce, per se is very savvy in terms of using technology.
Yes.
So they are buying on a Snapdeal, any product. They will use it for booking their air tickets, their vacations. So why not mutual fund? With this penetration of technology, things can change very rapidly in our industry and can really make a difference.
On that note, it's time for a very short break. Don't go anywhere. We'll be right back. You're watching the Financial Advisor Forums 2014-15 presented by UTI Mutual Fund and CNBC TV 18. Welcome back. You're watching the Financial Advisor Forums 2014-15 presented by UTI Mutual Fund and CNBC TV 18. 1.86% of India's assets under management come from Hyderabad. Looking at Chennai, that's 4.98. Looking at Bangalore, that's 5.87%. Now, these are drastically different numbers. And Hyderabad has that capacity. What can be done here in Hyderabad to get this 1.86 up to maybe at least up to Bangalore 5.87 or maybe even top that?
Critically, I'll pick the point from where Suraj earlier mentioned. I think that was his first quote. He said, we love the word guarantee. In a way, the challenge which I think traditionally, cities like Hyderabad face are where they are in love with that guaranteed return. So I think that's their first challenge. They have to break the jinx and say, look, while that is there is a great way to say there's a guaranteed return here, the risks inherent are not shown as much.
Yes.
But here we talk about risks first, and that's important.
People are very excited about two things, real estate and gold. But gold is a beautiful opportunity to do it electronically also. Do you see that as a behavioral change that needs to be brought in to people so that they can start moving things to the electronic path?
Essentially, when it comes to gold, my sense is that, women like jewelry. So the liking for physical gold is not going to go down, just because an ETF is available. Because to explain to somebody that gold is a great way to be bought through an ETF and it's a hedge on gold prices, but eventually the question comes is, will I get gold at the end of it? The answer is no. You have to take the money and go and buy gold yourself. So I think that's one of the reasons why I think the liking for gold continues as it is. But having said that, I think a lot of investors, do believe that when you move it online, your demat accounts, and when they see the convenience of holding, assets or any product online. In fact, today we are talking of, digitizing the land records and not having a sales deed and holding that on a demat form. I think that convenience will gradually sink in, right? But having said that, I feel the consumer behavior towards that asset class is very important to, decipher. And there is some which is part of tradition. You're not going to change that just because there's an electronic way of holding something.
Shashi, I want to come to you on this point of IFAs reaching out to smaller towns and villages, in fact. So even B15 and like Nitin was also saying tier 5, tier 6. So with the Prime Minister's Digital India initiative, the Jan Dhan Yojana, we're looking at getting people in villages and panchayats, so basically villages, onto the digital platform, getting access to financial services. Would it make sense for IFAs to literally go to smaller towns, smaller villages, spend some time there to get that trust, that essential trust? Do you think that's where some growth can come from?
I would say there's huge opportunity. While the cost of acquisition does not drastically change between a city and a metro and a non-metro, the opportunity, if you build up, will definitely help build greater AUMs for themselves and customers for the longer term. It's not an ambush, but it's a farming. You have to till it, you have to sow the seed, and definitely there will be a yield to take in 2 to 3 years to come.
The assets under management in India as a percentage of GDP are around 5 to 6%. Now this is significantly low as compared to other countries, so like Brazil, which is 40%, 33% for South Africa. There is headroom for growth. How do we get this into motion?
I think it has to happen from new channels. So what is happening, if you look at the market dynamics in India, structurally, it's the same customer that goes from one IFA to another IFA and maybe it rotates in the market. We've never been able to really break that and go out and acquire customers who don't invest in capital markets. If you look at the market assets, the concentration of the IFAs on retail money, which is considered sticky money, right, is low because of the ROIs. The ROIs are low for IFAs. So the amount of time you spend versus the ROI you get there, it just doesn't, meet the expectation. And that's a structural issue. And that has to be addressed only with new way of doing business. It cannot be addressed with the existing way of doing business. I personally believe that we will see something similar to the IT revolution that happened from 1990 to 2010 happening in financial services in the next 10 to 15 years. So the shifts will be really very, very quick and will change the way we think about financial services. And that has to happen. Otherwise, you will not see us graduate into the next level. For us to become a developed economy, there is no choice for us but to increase that number. That number has to go up from the 5% to 10, 12, 15, 20.
I would tend to disagree a little bit here because, I don't think so technology is the only solution in the business. So, for example, if I were to, remember right, many of your customers are first-time investors. So, if I'm investing 500,000, 5,000, I can come online, do an investment and be happy with how it has progressed. But chances are when it becomes 5 lakhs, 10 lakhs, 20 lakhs, I may want to bounce off those ideas with somebody in person. So I don't think so brick and mortar just goes away.
It's time for a very short break. You're watching the Financial Advisor Forums 2014-15 presented by UTI Mutual Fund and CNBC TV 18. Don't go anywhere, we'll be right back. Welcome back. You're watching the Financial Advisor Forums 2014-15 presented by UTI Mutual Fund and CNBC TV 18. Today we are coming to you from Hyderabad. How important is it to, in the earlier stages when you're building a relationship, give them this trust in these early days so that later on when they become big ticket investors, they stick to that IFA?
I do recommend sometimes to our advisors that why are you just looking at only the younger audience? There are also retirees. Right, so if you were to mix and match, the retiree will give you the assets because they will give you 25 lakhs, 50 lakhs, and the young guy will give you those 500 rupees SIPs, and that way you are able to even sustain your livelihood. You're getting the right amount of corpus, and you can still manage to give the right kind of advice.
Yeah, I just want to add a little to that. Yes. So, I have a very high value customer in 50s. So his son he works for Deloitte. He just joined the workforce. So I had to actually spend 2 Saturdays with him, explain what the market is, and then because he was very inquisitive, he wanted to be thorough, and I had to invest that time because he would influence his father someday, and that money would go out.
You have a lot of your customers coming in from abroad also. So is that a trend that you've seen over the last 2 years?
So I think it's been pretty steady from that perspective. So they've always wanted to have exposure to India, and obviously it helps that we are in a bull run. But I think we've seen steady inflows from NRIs having interest in India, especially from markets where say Malaysia or Japan, where we don't have issues like FATCA. They work there, but their home base is India, and it's always they want to invest back into India. So it's a very natural progression that we are seeing there.
Shashi, I just wanted to come to you on a thought that we've been talking about the B15 and that we need to get more exposure there. We need to get more people out onto the investing bandwagon. But your thoughts on maybe some of the 2-3 challenges that people face while getting to the B15?
The biggest challenge IFAs face today is scalability. As long as it's technology driven, the reach is not stunted. Unlike that with an IFA, he has to hire people. Hiring people is always a defined expenditure for an undefined profit for them. So a blend of both would work. A lot of reputed fund houses, including our own UTI, they are making efforts to help them scale that, in a manner and fashion, where the technology enablers are brought into them. So definitely, that is one challenge. Can he invest that money to get what Arthayantra today has? That's a big challenge. Challenge number 2 is, as I was mentioning, even if he starts going to the non-metros and putting up physical shops and investing in people to train them and get to the customer, the return is not as resoundingly reciprocal. If there is support coming in from established fund houses, scaling up will be definitely good for them.
2015 just started. We are a month and a half into the year. For the next FY, what can we expect from the industry?
Rarely do you find a time, when interest rates are expected to go down. So they are very bullish. You are very bullish on fixed income markets, and obviously when interest rates go down, the potential which equities offer, and equities being fairly valued, there's a great potential on the equity side as well. So my view is that wherever you invest your money this year, you're going to make money. I would say overall, I do believe that 2015 will be a fantastic year.
Thank you, gentlemen, for that. It was a really informative panel. But we have some questions that have come in from our audience. E. Satyam, his question is that, with changing technology now, where online transactions are increasing so much, where do you see an IFA's stand?
IFAs have a very important role to play. As I was mentioning, I think you should look at technology not as a competition but as an enabler. And once you actually look at it from that perspective, your ability to scale, we talked about some of the problems here, scale, the cost of servicing, all those things can reduce dramatically if you adapt. It's just a matter of, it's a mindset. If you can adapt and look at technology, there's enough low-cost options available, and that will really help you in the long term.
This next question is from Shyam. He says the traditional concept of investment is fixed deposit, land, gold. How do you think that mutual funds can be a preferred choice? Can a debt fund really replace a bank deposit?
No, I don't think so. You should think at as a form of a replacement. I think you should use mutual funds as a complement for your bank deposit. So my way of thinking is very simple here, that one simple question you ask your investor, that are you concerned about paying tax on your interest income from whatever deposit you have? And if the answer is yes, then I think simply you can move away to a mutual fund, because mutual funds are more tax efficient in that case.
Shashi, this question is from Vithal. He says, how important are events like elections, budgets to the stock markets and investments?
Election is very area centric. If it happens in Delhi, it may not impact except for a few points here or there. But a budget like event, for various reasons, is still an important event. While over the last 10 years, the markets have started behaving more maturely, not gyrating as much as it did earlier, but still the importance will remain because of the tax announcements, the concessions, or for that matter the increase in any of this. So events like budget are still critical.
Most significant part of the budget is taxation. So I think you don't have a choice but to focus on the budget, because if tomorrow tax laws change, your choice of investing per se can go for a change as well. So I do believe that budget can play an important role. And secondly, from a market perspective, markets are discounting mechanisms for future cash flows. So how companies will be profitable, what will happen to the taxation on those profits. I think all those are very important elements.
Anand, I want to ask you this. This is by B. Veera Reddy. In Andhra and Telangana, gold and real estate has more of attraction in investing. What steps can be taken for educating investors about mutual funds?
It takes time. It cannot happen in one meeting. As I said, liquidity is one important thing. Real estate comes with a lot of problems. There can be court cases, there can be again, there are taxation problems when you sell. There will be issues like cash and check. The mutual fund that way is very transparent,
Right.
it's very clean, and it's very liquid and very tax efficient.
Well, that's all the time we have on this Hyderabad edition of the Financial Advisor Forums 2014-15, presented by UTI Mutual Fund and CNBC TV 18. But we'll be back very soon with another forum from Bhubaneswar, which according to the World Bank is the best place to do business in India. Until next time, from the entire team, many thanks for watching.